The dollar index, at least in the last few days, has been catching a little bit of a rebound move, a little bit of a push higher. And I think that if you're a bull on the dollar index, you're looking at something like this. You're saying, okay, you have a lower high, then a lower low. But then now the question here is this a higher low for dollar bulls? So the question is this a higher low? And a lot of people, I would say, from a technical perspective, would say, oh, yeah, that's a higher low. We're going higher. And we might go higher. But I wouldn't really call it a inverse head and shoulders unless you get some sort of break of this lower high concept, right? Because what we could be seeing for the dollar index is just range bound, right? You could see something like this. So I wouldn't rule out the idea that just because you've gotten a bounce does not mean that this is going to be a full-blown, upward trend from here on out on the dollar index. Could it happen? It's possible. Anything is possible in the markets. But I would say that as you hit resistance here, and even more so here around the 105 level, you could see sellers come back into this market to continue the rate cut story this year, which I think is still the prevailing theme of markets in 2024. Rate cuts probably happening at the end of the third quarter as well as the fourth quarter could weaken the dollar. When we get back to monetary policy, we talk about where the Fed is going overall, the path does seem pretty clear. You've got more data coming down the pipeline, but we've talked about this a lot. Jobs data out of the US. Let's have a look at NFP. You can see that jobs growth has been not weak, but cooler than it was. You were seeing some much higher numbers early 2023. We've seen numbers kind of cool on that front. The private sector, let's take a look at ADP. You can see cooled recently in recent monthly reports there. If you take a look at unemployment claims and we scroll out a little bit of time here, let's go like 180 days. Hold on. 180. So you can see unemployment claims have been just slowly, gradually rising. And remember, people filing for unemployment, this is not, we're not in crisis mode by any means where unemployment is, but it's growing. And it is worth mentioning that when unemployment is growing, historically, it usually keeps trending the direction that it's trending. So recently we have seen unemployment rising. But you have to also be fair, because a lot of people will say like, haha, the economy is looking bad, but it's not looking bad. It's just coming off of its all-time lows in unemployment. So when you take a look at unemployment, you go back a couple years, take a look at the last 5 years or so. If it loads, sometimes Edge Finder freezes up when I'm streaming. If you take a look at the last 5 years on this stuff, I'm going to refresh this page, see if it works for us. Unemployment jumped up big time during the outbreak of COVID-19. Let's try just 3 years, see if 3 years works. And then it started trending back down, and we've seen, really low unemployment. And then we've started to see unemployment kind of rising again. Again, you have to say, well, are we at a bad spot right now? No, people are very, very historically employed right now. I know it may not feel like that because people are still struggling out there with higher prices at the grocery store. Don't get me wrong. I'm not saying this is a perfect economy by any means, but I think it is pretty fair to say that people are pretty employed right now, but we're seeing a shift in that. And that shift could turn into a bigger shift, right? You could see, if the Fed does not start to cut interest rates soon, you could start to see unemployment accelerate higher. And that's what the Fed and what the market does not want to see. So as we've seen these data points rolling in, slowly creeping higher, that is where Fed expectations for a rate cut are seemingly becoming more likely. So you have unemployment rising, and the final piece of the puzzle is inflation. Is inflation coming down? That is the question. What we can see is inflation has come down. It's gone sideways for some time, but in recent months, we've had some good progress in inflation. So it would seem to me that the Fed is doing a pretty good job overall at working their way back to the mandate.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
I don't want to be rude, but I think your long in the NASDAQ is too early. We got one more leg down. Sebastian, I don't take that as rude at all. If you have a differing opinion than me, then do your thing. To be completely fair, though, like if you have a reason to be short or you're bearish or you're not bullish, like I'm not going to tell you that you're right or wrong. I'm sticking to a strategy that I've got. So I like the NASDAQ on the long side. I have my risk managed if I'm wrong. You might be right. You might be wrong. The market might bottom out here and rip higher. As long as we're all on the same page that nobody knows perfectly well what's going to happen in the markets and we're all managing risk appropriately, we can agree to disagree on certain things. Also, I actually would love if the market goes lower. I don't think it will, to be completely honest. I could be wrong about that, and that's why I've got a stop loss. I don't think it will go lower. I think this level could hold. And if it does, then excellent, we'll make some money. If it doesn't, to be completely fair to you, honestly, I'd like that better because I like these levels even more for building a bigger position or getting long. So I do have a stop loss in this trade, but if we break and we go lower, I actually like this level better because then I feel like I'm getting a little bit better pricing on the NASDAQ, the S&P, the Dow, etc. So I hope you're right, but I do think that this support has a good chance of holding. We're in a very strong bullish market. Sentiment is very bullish, and that can stay irrational for a lot longer than people think. I've been in this market for a long time. What I've found is that, when everybody thinks something's going to go bearish, oftentimes that's a really good buying opportunity. Personally, it looks like a nice entry, Nick. Looks like it touched a fresh area of demand and we're bouncing off. We'll see. Again, the thing is, what I want to encourage everybody who's listening, I don't know with certainty. I'm not being stupid with my risk. I'm not gonna cross my arms and say, no, it can't go lower. But I'm also gonna say that I'm not, 100% sure of anything. You never should be. In my opinion, with markets, you never should be 100% confident. It's a great way to lose all your money. Never be 100% confident. The old expression that I've heard many times, and I thought it's stuck with me, is this concept of hold loosely to strong opinions, right? I think the market heads higher. That is a strong opinion, but I'm holding loosely to it. And I'll admit if I'm wrong. You're not going to see me be like, well, no, it's a bad trade and I'm just not going to get stopped at. No, I'm just going to stop out. Like if I'm wrong and move on. Set up the next trade, right? Where traders go very, very wrong is they bring their ego and stubbornness with them to the markets. And they say, oh, well, if it goes down, it's a fake out and I'm going to move my stop loss and I'm not going to, and then this happens to them and it will happen. I will be dead wrong at some point or another. Maybe it's this trade, maybe it's not. But when I'm dead wrong, I'm not going to go down with the ship, right? Don't put your pride before your risk management. So yeah, we'll see. Don't learn strategies or systems or watch anybody's content that does not show you long dated, regulated broker statements or, logs into their trading account regularly. Okay. It really don't, mess around with that stuff because you're going to waste a lot of time watching people that don't. I'm telling you, anybody who has a smooth talking, way about them could start talking about trading and deceive people into thinking that they're super profitable. I am absolutely not accusing any particular person on YouTube of being that. I'm just saying that those people certainly exist. And the ones that you should listen to are people that show you their performance. Like if you're asking me, should I go spend thousands of hours learning concepts? It seems foolish upfront to say, I'm going to go do that without seeing whether or not that person actually has the results that I want, right? Show me the results, point blank. Like, am I going to watch your content for hours and hours and hours? Show me results first. That's the only way. Otherwise, I'm not going to do it. So that's my take on it. And I have a hard, opinion on that stuff because I genuinely sympathize for people who have invested so much time buying courses, learning from people, but those people have never shown them that they're actually profitable. Like, imagine how much time has been wasted from people who, have dived deep into learning a strategy or a system and have no idea if it actually works or not. Nobody's proven to them, yes, it is working. So when I show you guys my content, I'm not here telling you that I'm the world's greatest trader or that I make, millions every month or that this stuff is easy, right? I'm not here to tell you any of that stuff, but I do show you my logged in broker all the time. I find that to be very, very important to do. In fact, I'll do it right now because I do it regularly. And I think it's important that influencers that you spend time watching do that. So 1 second, I'll log in. I want to oust my my password here. So I'll show you guys what interesting, exploring other accounts options. Currently all set. Oh yeah, that's cool. Webull did launch their futures brokerage side of things, which is really cool. Okay, so here are my current positions. I am long the NASDAQ, the technology sector through XLK, TLT, gold, the cybersecurity ETF CIBR, and XLC, which is comm services. Think like Netflix, Meta, Google. So I do that to show you that, if you spend time watching my videos, my live streams, I do what I say I do. I'm not messing around. I'm not wasting your time. The next chart I wanted to pull up here is gold, just for a second. Talk a little bit about gold. So I am long gold, as I mentioned. Higher lows are the question here today. Are we going to see this thing hold support around this 2400 level that we tagged the last few days? I like gold to the upside. On a fundamental perspective, I like it a lot because with all of this political uncertainty, the elections and the what's going to happen on the Eastern European theater, right? Following the end of the election, whether it is Trump taking office or likely for the Democratic nominee, I believe it is expected to be Harris. If Kamala Harris wins the election, or if Trump wins the election, that uncertainty, I think, has the potential. This has been a theme for me all year long. We've talked about gold being kind of a thematic hedge to a little bit of all this political uncertainty, as well as war uncertainty. Unfortunately, we live in a time where wars have come back into I think like pre the Ukrainian situation, we were at like an all-time low for like global violence on average, which was awesome. And unfortunately, nobody likes wars, but the question will be what's going to happen next in those, conflict heavy theaters. The other one is Taiwan and China. And, if you're somebody who is concerned about that situation, a lot of people are concerned about if Trump takes an aggressive stance on China again, what's that going to look like? So there's uncertainty. And I don't claim to know what's going to happen in those scenarios, but I do think that a fair hedge is to stay long gold for me. So I will probably, for the remainder of this year, as long as I can find technical setups, remain on the bullish side of gold, as long as rate cuts are expected and we have uncertainty on the geopolitical front. I like gold longs. I've made good money this year on the gold long side. I have not been completely right in my timings on this. I took several losses during this time and made good money during these recent trend times. But generally speaking, this year, I've made a lot more money than I've lost on gold. And that is all that That's what trading's all about, right? Winning more than you lose overall. So we'll see. But I have a stop loss on this trade. If gold turns around, I will stop out and look for other entries.
I can kick myself, Nick. Honestly, I can kick myself. I was basically looking for some beautiful longs when it comes down to this beautiful pick called the Nasdaq, right? And you know what? I basically found myself. Can I share my chart?
Sure.
So I basically found myself. I don't know if this happened with you guys, like ever. Share screen. Just like that. So this was like the trade which I found myself taking over the course of today. However, let me show you this. Let me just remove everything right there. So as I had mentioned, like previously when I basically joined the show, right, I said that with equal lows and equal highs, there's liquidity resting above and below these areas. Right now, I basically was like, you know what? I think that I am going to find myself, swinging the Nasdaq towards the upside, right? Simply because we are taking out some liquidity at these areas right over there. And from my actual 15-minute, right, my trade was basically looking something like this. I found myself going long. Where was that? It was around about here. If I can maybe just share, I actually did take a screenshot of the trade. I'm not sure. Can you see the image of the picture on my screen or not?
No, I can't. I think you've shared the specific browser, but if you share your whole screen, we'd be able to see it.
Okay, let me try to do that. Let me try and do that. Well, okay, I can't find myself doing that. So I basically found myself entering price at 19,558, right? So if I can maybe just find myself doing this, just so that we can 19,558, right there. Right, I do know that it was somewhere here, right? So I basically found myself going long with price, and with the tap, or basically with us basically taking out our liquidity, right? I found myself going short, and I was like, you know what? I'm gonna find myself swinging this trade because ultimately I wanted to see right over there. I had a 300 pip. Take profit area. And wow, right, for the majority of the time I was in a loss, right? And price basically fluctuated. So we closed in a loss on Friday as well, right? And I was like, you know what, since I'm seeing my actual swaps whatsoever, I was like, you know what, Nasdaq found itself creating a gap right over here. This was now on Monday, right? So on Monday I woke up, price was around about this area right over there. I was like, you know what, price created this gap, we need to fill up this gap right over there. And with the ideology of, okay, I'm gonna cut my actual trade right over there, you know what, cut off the actual swaps as well. So if I'm finding myself having that actual shift to the downside, I will just re-enter price. And I haven't re-entered price till this day, and look at that, we had like a huge shift towards the upside. So that right there was in trade, but unfortunately I didn't find myself taking advantage.
Well, that's Diego, the thing is that's cool about that is at least you can kind of acknowledge a time when things didn't go well. I think what is so crazy about the trading community is most people can't, or most influencers or traders in the space, they won't ever talk about when things don't go right for them. So just while we're on the theme of NASDAQ, I tried to go long here, and this ended up being a point where I went long, put a stop here, and immediately got smacked out of my trade. So you know,
Yes,
it
yes.
happens. It's just part of the process. Sometimes you miss trades. Sometimes you stop out on a trade. So totally, appreciate at least just sharing your missed opportunity or trade that didn't go well or didn't happen. It happens to everybody, and I think what's powerful is when traders who share content can actually talk about feeling a FOMO moment, or I think that a lot of people in the audience really resonate with that. So thanks for sharing that.
Pound USD on the 1 hour. This is the pound futures chart. It is just simply a different contract. It's the exact same pricing. Okay, so pound. Now, I have been wanting to short the pound for a couple weeks now, pretty much the entire month of July. And I think we are potentially starting to see some of that pound weakness come into play. The issue here is, for a significant move to the downside, we're going to also need to see dollar strength, which is not my ideal. Daily level of resistance right here. Okay. So, again, with the US economic data coming out this week, sort of anticipating some softening in the data. I don't like to anticipate data. I like to react to data. I want to let the data hit and then get involved in the market. But as far as pre-positioning goes, if I was to get involved ahead of the data, and my bias is weakening US data, then I'm going to be looking for pound upside. And it's tough because you don't necessarily, I wouldn't necessarily call this a strong support. It's an area where price sort of, based out and then rallied from. I like this support more because it is a stronger attempt for the bears to come in psychologically. If you're looking at price action from a psychology standpoint, this is a point of pretty strong resistance here. Resisted, comes in, resisted again. A lot of selling happening in this area. A lot of price action with more volatility, more movement than this area. So I tend to view this area as a bit more impactful than I would say this area is. So I don't want to get involved on a buy from this area ahead of US data tomorrow. And we have pound data tomorrow. We have pound PMIs coming out about 4 hours ahead of US PMIs. But regardless, this is how I would trade the pound at this point in the game. One, I'm not going to get involved in anything just yet. I'm going to wait for PMI information tomorrow. Now, the ideal scenario would be to get strengthening pound PMI in the morning. We go ahead and we jump in on buys. Let's say the data drops right here and pops, and we see the pound pop to the upside. Boom, get in as soon as we can and let it ride. Maybe take some profits off the table as it's going up. As we near the US PMIs, you have a choice to make. Anybody who would trade it like this would have a choice to make. One, you take everything off the table and wait for the US PMIs to drop and then get in on a scalp if PMIs come out the way we want them to. If US PMIs come out weak and pound PMIs come out strong at 4:30 in the morning, my time, and then USD PMIs come out weak, we would see a continuation of pound upside from the US point. So that choice that you have to make is whether or not you're going to secure all your profits ahead of the US PMIs and wait for the PMIs to jump back in, or if you're going to be in from the pound PMIs, take a little bit of profit off the table, maybe protect your downside with a stop loss at break even, and then let the US PMIs hit and potentially be pre-positioned in the market for a weaker US PMI move and a continuation of that move. So you're talking about an entry from here, partials taken, the same entry holding, US economic data comes in weaker, and you continue that move. Or pound, strong PMIs, you get involved, take all your profits off the table, wait for the USD PMIs to come out, which price could be up here at this point. They come out weaker, and then you get involved again and take another little trade from here. So personal preference on that, but that's the way I'm going to be approaching it. And it's going to be the vice versa scenario as well. If we get weakening pound PMIs, now with this, I personally, if we get weak pound PMIs, I would take all profits after the pound PMIs, which is how I'm going to be trading it. If we get weaker pound PMIs, I'm going to be taking all my profits after my scalp, going into the USD PMIs. If we happen to get stronger USD PMIs, well, then I'll again sell off the pound from that point. But I'm not going to want to hold it into the USD PMIs because I have a presumption about the USD PMIs that we're actually going to see weaker data tomorrow. So with that bias baked in, I don't want to be holding anything against potential US weakness.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.